Welcome back to Ponzi Scheme Investments, your go-to channel for breaking down the latest in stock market news and trends in a way that's easy to understand. Today, we're diving into a topic that's got everyone on edge: the possibility of an emergency interest rate cut by the Federal Reserve. What does this mean for the economy and your investments? Stick around until the end, because we'll be revealing a surprising strategy you might want to consider if the Fed does decide to cut rates. Trust me, you won't want to miss it. But before we get started, make sure to hit that subscribe button and ring the bell so you never miss an update from Ponzi Scheme Investments. Alright, let's get into it. So, what's all the buzz about an emergency interest rate cut by the Federal Reserve? First, let's break down what an emergency rate cut is. Simply put, it's when the Fed lowers borrowing costs outside of their regular scheduled meetings. This is a big deal because it only happens in extreme situations. The last time we saw this was back in March 2020 when COVID-19 hit the US hard. Even then, the stock market tumbled despite the rate cut, showing that these moves can sometimes backfire. Historically, the Fed has only implemented emergency rate cuts during major financial crises, like the 2008 financial meltdown, the 2001 terrorist attacks, and the bursting of the dot-com bubble. So, it's not something they do lightly. Why is everyone talking about it now? It all started with last Friday's jobs report. The U.S. economy added fewer jobs than expected, and the unemployment rate crept up to 4.3% from 4.1%. This sparked fears of a slowdown or even a recession, leading Wall Street firms to call for more aggressive rate cuts. Some experts are even suggesting a 75 basis point cut now and another in September. On Monday, things got even more intense. Global markets were in the red, with Japan's Nikkei 225 suffering its biggest one-day drop since 1987. The U.S. stock market also had a rough day, with the Dow Jones Industrial Average dropping over 1,000 points. Investors initially flocked to the safety of U.S. government debt, but then pulled back, showing just how jittery everyone is. So, why hasn't the Fed acted yet? According to Fed Chairman Jerome Powell, they want more confidence about inflation before making any moves. As of last Wednesday, they decided to keep rates unchanged. However, the odds of an emergency rate cut are rising, especially with influential voices calling for immediate action. The bar for an emergency rate cut is very high. Even with the recent slide in U.S. stocks, we're still higher on the year. An emergency cut could potentially cause more panic rather than calm the markets. Let's also keep in mind that corrections are normal and that while unemployment is rising, it's still historically low. The Fed can still manage to stabilize things, but it's becoming increasingly difficult. So, what's the surprising strategy some experts are talking about if the Fed does decide to cut rates? Believe it or not, some are suggesting that investors look into currency markets. Yes, you heard that right. Currency markets can act as a catalyst for the Fed to step in, making them a potentially safer bet during these uncertain times. There you have it, folks. The possibility of an emergency rate cut by the Fed is a complex and nerve-wracking issue, but understanding the factors at play can help you make better investment decisions. If you found this video helpful, don't forget to like, comment, and subscribe to Ponzi Scheme Investments for more insights into the stock market. Until next time, keep your investments smart and your worries low.